Hey guys, it's Will here again. I just wanted to talk about the markets a bit and maybe a few stocks. And with that, I'll explain kind of how I look at things in terms of the charts and some of the moving averages and stuff. If you've watched my videos, you might have a sense of that already. But let's just jump into it. So I'm a little bit concerned with the market right now from the chart perspective, just what I've seen in the last few days. And so I'll tell you why that is. So I'm looking at a daily chart on the NASDAQ here. And one of the criteria I like to see is a candlesticks, which are these things here, that are above the 8 EMA. So this black line is the 8 EMA. It's an exponential moving average. And that generally would follow an uptrend as well. So if we draw a line, say here, the 8 EMA follows the price a bit closer, but you can see when you get that break, it's at around the same time as you have a close below the 8 EMA. So the candle opened here and it went down there. You can see how it came up here, pushed back a bit, and then we had some down candles. So over here, which is on Wednesday, we had a really big down candle. So we had one here too on the 9th of November, which is a bearish engulfing. So we had a couple dojis, very small candles, and then this huge down candle. And that pushed us down, and we ended up hitting the 50-day moving average. So it didn't go down a huge amount, but this big, huge candle, is generally a sign that we could have a reversal. And that didn't last very long, so we had this pushback. And then we had this candle here, which is not quite a bearish engulfing, but a very big down candle. So you can see how it's a lot bigger than the other candles. So then we had a gap down, but it came back up that day. But it came back up and it never got above the 8 EMA. And then we had a small up candle here, but you can see how it went down. So if we go to, say, a 10-minute chart, so this is the 11th, yesterday, Friday, we gapped down, we kept going down, and then at about 1 o'clock, we had this recovery here, which is a good strength, a good sign in that. But there's been some negative obviously a big down candle, a gap down, but we did have some recovery the last couple of days. So we'll have to see what happens here. Now, if we look at this indicator, I don't think I've talked a lot about the indicators, but because the price is the most important thing, but this is the price percent oscillator, which is similar to the MACD, but it's created so that it doesn't change from one stock to another. Like it removes the price from the calculation so that you can compare them in a more generic way. But either way, you'll see that this slopes down here. So that when this crosses here, it's usually a negative sign if it goes down or if it crosses up. So when you have like what I call a MACD crossover, it can be a sign of an uptrend. You can see here. And so over here we had a cross, and that was a uptrend as well. And then when we have a cross down, you can see how it went down. Now this is a bit of a delayed reaction but if you look at where it starts to slope downward over here, it's an earlier indication. Of course, it can slope down and come back up like here. So the crossover is a bit more significant. The other thing that this chart has is derivative oscillator, And that's kind of the distance between the moving average and the price percent oscillator. So you can see how it's increasing, which is good. Green and increasing is good. Once we get to here, it's going down, and then it's red now. So you can see there's a gap below. So this is crossed down, and there's now a gap on the negative side. So this histogram is a indication, maybe a clear indication of the gap between these two lines, the moving average. And so as it goes up, it helps you see that there's a bigger gap, which is a strength, and also a potential reversal point when you get too big. So I have a concern here. And along with the NASDAQ, you have these crazy IPOs that are going up 100% in the same day. So keep an eye on this. You can see that another thing people look at is how far away from the 50-day or even the 8 EMA. So this got quite a ways away from the 8 EMA. So I like to see it close. But once this got way up here, it generally will come back. And also the distance from the candles, the price from the 50-day moving average got really high. So this was 13%. So let's look at the other charts. This looks better in terms of being above the 8 EMA. So obviously the NASDAQ might, people sense that it's more overvalued. But the small caps hadn't been quite so overvalued. So it is still above the 8 EMA, but over here, the MACD or the PPO is quite flat. And so you can see how much it was going up here when it crossed, increasing a histogram here, and then kind of a flattening here. But it's still above the 8 EMA, so in an uptrend here. The S&P is similar to the NASDAQ. It had a bearish engulfing candle, and then two small little candles here that do have a positive look to them in terms of being, green candles, if you will, or white in my case. But they're below the 8 EMA, and you can see this declining momentum. The Dow is similar, pretty flat here for quite some time, and decreasing momentum and very small histogram here, so very flat. The other warning signs that I mentioned, along with the fact that the NASDAQ looks like this with a big, huge down candle and this decreasing momentum in the indices here, are two other things that I noticed. Is that the dollar, I'm in Canada, so the US, or you could look at the dollar index in the US itself. But we've had this declining situation here, exchange rate, which is between Canadian and America. So when this value goes down, the US dollar is less strong. So it's been losing strength. But you see here, that we had this 0.39% candle here. So nothing big enough to change the direction here, but that went up, and that signifies, some issues. People buying the dollar, buying bonds, whatever. And then the VIX, which is the volatility index. Now, you can see here that this is about 1.7 months. And since that one, we're at 1.5 months. Or you can see how it comes down here. It's declining VIX, and then it comes up, and then it goes up. So it's actually been still declining since the original spike in March. And every so often, we get this spike. And it doesn't have to be significant in terms of the overall downtrend, but that was a quite, that's 25%. So you can see here how we flattened out. You can see it's flattening here back in October, and then it went up and crossed over. So you can see that we have a bit of a flat spot, and then we came up here. And this actually is above the 8 EMA. And down here, when you look at the price percent or the MACD, you can see how the line's been coming up. And now we have green histogram. So that means that the space here, the moving average is crossed up. So this is a sign of increasing volatility. And so that kind of can indicate an issue that will happen with the markets as well. So it's a bit of an indicator for, a decline in the market, a pullback. So when you look at all that stuff, I am quite nervous about what's going to happen, but we'll have to see, like I said, if this holds up and gets back up above and we start moving up again. But we did have a cross here, and over here where we had decline here, we didn't get the cross. This decline here was 9% in the Qs. So your stocks, depending on what stocks you have, they'll go up a lot more. So if we look at individual stocks, what I like to look at is candles above the 8 EMA and an increasing price percent oscillator, MACD, and stochastics will be coming up as well. So this area is kind of the ideal scenario. You have these green volatility stops as well. They switch from red to green, and that's a good sign when they're green dots below the candles. And that's a good sign. You can see here when this switched over and we had this uptrend. So if you want to ride that trend just from here to here, 23% in a relatively short period of time. In terms of the entry and exit, so you see the MACD crossed here, but these dots are still red and it's kind of flat below the 50-day moving average. Once we get above the 50, you have a potential entry point. And then if you want to use the close below the 8 EMA, which would be here, if you waited another day and started to see it come down, you don't have to wait till it closes, but you could sell right there. And then here you have this cross. So right around here or the beginning of the next day, you would have gotten out. Here you have a potential entry point, but you can see how the MACD was still below, but it was coming up. So if you tried to get in early, but these things don't always work and there's an instant reversal. But if you did want to wait till you saw a more confirmed cross. The other thing is when you start coming back up again and you have a recent high, you can wait till it breaks that high. So it didn't break that high. It actually hit that resistance and came back down. And there's also one way up here as well. But if you were looking at this one, you might have waited till it broke that recent high. So it's not just one thing like getting above the 8 EMA, but it doesn't always work. You get those reversals sometimes. And then the next one, you can see here that we had a crossover. Stochastics are rising and the green volatility stop. Above the 50, above the 200. So that was looking like a good entry. So we still have a good entry here. It's above the 8 EMA. And so as long as we don't have a close below that, so Etsy is still looking good in terms of the chart for that particular stock. But of course, with the markets, it's a bit nervous, a nervous situation. Now, Chewy had a recent earnings report, and it actually doesn't do what you always think. It doesn't just immediately go up when there's a good earnings report, but now you can see how it is. But if you got in here, this is where things get a bit tricky depending on your philosophy. So in terms of the stop losses and things, but when you have a close, if you bought down here and you have this close like right here, at the end of the day, you don't necessarily have to sell. You can sort of wait. And you have this 3 EMA, which is still above the 8, and that could be one of your signs. The other thing you can use is volatility stop, could be your stop. So it's not, you don't put a stop right at the 8 EMA. You can have it a bit lower. So it depends, where you get in. And then this MACD, this PPO is still above this whole time, although there are declining slopes here. But in this case, if you're a little bit looser with your stops, you know, either with a V stop or just waiting to see what happens if it closes just below, like I said, you wait for the next day, and then you still have pretty much candles that are above the 8 EMA. And that they had a really good earnings report, and they have a lot of subscription-based revenue coming from people ordering pet food online every month automatically. So ENPH is a solar stock. So if this could be, if you're looking at this right now, you don't have a crossover of the MACD or PPO, but it's starting to curl back up, and the stochastics are starting to curve up a bit. So it's close to a potential entry point, but you have this recent high here, and so you'd probably want to see it break through that. If you look here, you had this crossover, and the MACD is going up, and you would have followed this through until it broke down right here and crossed down, and this closed below the 8 EMA. If you got in here, you might have gotten out with this close right here, but if you're using the V stops, the green dots, you keep your stop down here, you probably could have rode this up until around here somewhere. But solar is potentially a growing field, and you know, there's been a few issues lately. The nice thing with TC2000 is you can open up the watch list for the related industry and see other stocks. And I added other columns, so I can look at relative strength. So right now, Sedge is another one that went up quite a bit. But I can sort this by relative strength. So what happens is you right click. If you want to add a column, let's say, you can add a column. And then once you do, you can right click and say save column set and make it your default down here. So every time I open a watch list, it shows me the default columns. So I have relative strength. You could sort by if you want. So you can see S power, Sun Power was basically a very strong relative strength. Now, relative strength is a 1-year calculation relative to the S&P. So some stocks might have had a high relative strength with the initial rise after the March crash, and might not be doing so good right now. So it's not necessarily something you have to just completely focus on, but the ones that have a good strong relative strength, like this is 533, you know, they tend to keep going. So it's a good indicator. So I'm using TC2000 if you want to get a free trial, or if you end up, you can get $25 off your purchase. I'm using the gold plan. I've got a US real-time data as well, but you can get a link in the description below to sign up for this free trial. And I use this, and it's great for scanning, for watch lists. And I'm also using MarketSmith, and that's more for the fundamentals. They have all the fundamentals right on the chart, but the charts aren't as good as TC2000 in the way you can't change the chart really. So these are candlesticks, and I can look at daily, weekly. So sometimes it's nice to look at a weekly chart because you want to see that the weekly cross has happened. That gives you a strong trend indicator that you're in an uptrend weekly, and then you can, if you want to trade on a daily basis. So I've also got sectors. So I've got a lot of Kathy Wood's ARC W in here, the web. I've got online iBuy, which is the online retail. Work from home, which is the direction, work from home ETF. There's emerging markets, internet. So if you want to use, ETFs, you can also do that. The nice thing with the TC2000 is with the ETFs, you can open up the related, and you find all the stocks that are inside there. And you might want to just buy certain stocks that are in there. All right, guys, I hope you like that. We'll talk to you later.